Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I represent my group members. Will explain about the assignment questions that we had given. Based on the assignment questions, they said that it is estimated that the new terms will increase sales by 10%. So that's mean the sales will increase 10% from 1,350,000 to 1,485,000. And then next, the ratio of the cost of merchandise sold to sales is expected to be 60%. So that's mean the cost of merchandise sold is 60% of the sales. So it will be from 810,000 to 891,000. And then all selling and administrative expenses are expected to remain unchanged except for the store supplies and miscellaneous selling expenses, which are expected to increase proportionately with increased sales. The amounts of these items for the year ended 30 September 2019 were as follows. So that means selling expenses and administrative expenses will remain unchanged with amount 140,000 and 90,000. Next, for store supplies expenses will be 12,000 and miscellaneous expenses will be 6,000. First question, benefits of the proposal.
Okay. Benefit of the proposal is the proposal has a view the necessity of a giving sales discount to its prospective customer. It is considered that 2% discount will be given if the payment made within 15 days. Sales discount through as an effective way of attracting new customer and offering logical business opportunities to existing customers. And then this will contribute to the maintenance of the account receivable of the company.
Second one, what is the benefits and limitations free on board?
Okay, for the free on board, benefit and limitation is for most shipper, FOB is the most frequently recommended term of sales. Why? Because it allows for greater control over both the freight itself and the freight cost. And secondly, free on board shipping point implies that it is the buyer who will pay the freight charge for the shipping the goods from one place to another. As soon as the merchandise is loaded inside the freight truck, it becomes the legal responsibility of the buyer, and if anything happen to the shipment, he will be liable for the loss.
The third question, potential strategies related with trade or cash discount, credit term and shipping terms.
For the potential strategies relate with a trade or cash discount, credit term and shipping terms, this trade discount make the business sell both popular and unpopular goods of the company. This method help the company to sell the unsold goods to the customer, and when the customer buying the good, it will indirectly can increase the sale of the company. Another method is a cash discount. The cash discount can make the business to improve the sales of the business, as the customer have to pay the organization give an impact to reduce a certain amount from the total amount. This reduction make the customer strike. The organization strike the organization name as is provide the cash discount to the customer, and for sure it can increase the loyalty of the customer. Thank you. Then for the another more thing, for the credit and shipping term of the business also improve sales and cash in the business. The credit facility provided by the company can increase the sale as the customer can buy the product first and then can be paid later. So it will decrease the burden of the customer as they do not have to pay on the time that they bought. And then the shipping facility that provided by the company also will have an advantage in competitive market. They need to bring in the shipping method or ways in the business to make it easier for the customer to deal with them.
Last but not least, the use of single-step statement of profit or loss and other comprehensive income, and the benefits of using multiple-step statement for improved decision making.
The single step income statement, which is offer a simplified snapshot of a company revenue and expenses. This straightforward document merely convey company revenues, expenses, and bottom line net income. All revenue and gains are total at the top of the statement, while all expenses and losses are total at the bottom. This simplified approach make a record keeping easy for both the accountants who prepare the statement and the investor who read them. Shareholder needs only focus on their net income figure to gauge a company overall vitality. On the other hand, some investor may feel single step income statement to be too thin on information. The absence of a gross margin and operating margin data can make it difficult to determine the sources of most expenses and make it harder to project whether a company will sustain profitability. Without this data, investor may be less likely to invest in a company, causing businesses to miss out on opportunity to acquire operating capital. Benefit or multiple step income statement. Most publicly traded company use multiple step income statement, which categorize expenses as a either direct cost, also known as a non-operational cost, or indirect cost, also known as a operational cost. Direct costs refer to expenses for the specific items such as product, service, or project. Contrarily, indirect costs are generalized expenses that go towards company broader infrastructure and therefore cannot be assigned to the cost of a specific object. Example of indirect costs include salaries, marketing efforts, research and development, accounting expenses, legal fees, utilities, phone service and rent. The silent breakdown in a multiple step income statement allow for deeper analysis of margins and provide more accurate representation of the cost of the goods sold. Such specificity gives stakeholder as a sharper view of how a company give a stakeholder a sharper view of how a company run its businesses by detailing how the gross operating and net margin compare. On the downside, multiple step income statement can be labor intensive for accounting teams to produce because of the granularity involved in managing and recording copies data. Case in point, each type of revenue and expense must be diligently categorized and each transaction must fastidiously record. Any mistake could cause investor to make erroneous assumption about the company, which could negatively impact the business. Thank you.
So the question asks whether the employment of FOB shipping point and the sales discounts will assist in achieving the targeted 10% increase in sales and net income for the business. The answer is yes, because based on the calculation, we can see that there's 11% increase for the net income for the business. So I think that's all, and thank you.